Welcome to TradeTheMBI.com. This is John. This report is for the 27th of February. We had a continuation below the 50% there. Not continued weakness, but kind of a soft rise in MBI white. And you can see the DOC orange continuing to drop in minus 23. You can see the automatic tick up starting to take place there. And it's still stabilizing minus 18 for red DOC. That's not the worst, but it's not exactly jumping for excitement. So, will the early pump hold? It's not looking so great for him, but doesn't mean that you're going to get a turnaround with it. I think it's going to stabilize here. We'll be looking at that 50% number, which right there at the 91 range. You can see the magenta is by default actually gone above MBI yellow there, so that's an indication that you've got a slight imbalance towards the bull side, and you moved back here with steel rising above 7.5. So not a whole lot left, but I think some of it's just a reactionary move at this particular stage. NQ only getting to the 38% at this particular stage of it, and not quite as dramatic as the DOC on the S&P. So it's going to lag a little bit, and we're just starting to get the crossover. We'll see if that even holds out throughout the day. Relief, it's just part of the back and forth as we get towards the end month. And again, as yield continues to be a problem, you're going to get this situation back and forth where, there's some traction going into the stability of treasuries. And as long as that remains the case, then the market will have a little bit of pressure to fight with. From an oil standpoint, though, this is where it gets dramatic, because now we're getting into, reasonable levels. Not exactly, ideal, but you're still below 70 at this particular stage. Any further decrease you can get to the lower 60s, I think, is really where it's going to start to have some impact, particularly if it persists over time. And that's the question. A lot of this, I think, is the early hope on resolution with the Ukraine-Russia, or at least Russia-U.S. relations, and whether or not there'll be some movement on sanctions and that. And from an EU standpoint, they're still riding high off of the U.S. weakness at this particular stage, but that's an elevated situation, and don't expect it to remain like that for very long, simply because there just isn't any incentive to be in the euro at this particular stage. The only benefit is the oil, the reduction. Gold pulling back here to the 76% level. Reasonable within what it's seen from that move, and given the weakness in crypto, faring a whole lot better, relatively speaking, when you look at Bitcoin and that, having filled all the way back to, the setup right here with the positive extreme, and then you have the gap range, and that would be a significant move. If it drops all the way down to the 80 level, that would be pretty significant. It's still looking at some weakness, but just like the daily here, you're seeing that magenta pop up in front, and might be enough to just hold it in place for now. We'll see how it starts to fare towards the end of the month, and then going into the beginning of the next, and not quite the same resilience you're seeing from ETH. So people who describe bloodbath, well, all we're getting is just a full fillback of the run-ups that we had, and a lot of that was just exuberance and enthusiasm. So you can see the rise up brought us right to the middle of the day, and then magenta started to decay pretty rapidly. Once we got through there, you had the DOC spread, which was right about at that spot, and then from there it just started to escalate, and MBI white pretty much stayed above until we got this flip around right here. And once it overtook MBI white, that's when you had real solid support within that, even with the back and forth. So then you had the rising MBI white with magenta leading, and that was a short cover pre-setup built into that one. That's pretty clean and easy, but you can see from an intraday standpoint, pretty much from mid-morning, and it was just selling all the way through, and then that got too strong, so call buyers jumped back in to push things, and they're driving it at this particular stage in post-market, as you can see from the European session, all to the upside. So still fantastic volatility as promised, and it's not going to go away anytime soon, because the the reality is that there's still no clarity as to a directional thing. As things get shifted, it's still going to be, like I said, not until June or July before you see real clarity, unless oil drops dramatically within the next couple of weeks. It's just going to take time. So don't get worked up about it. Enjoy that volatility and take advantage of those intraday plays because it's beautiful. As always, anything relevant, I'll put in the Skype chat for you. Have a good one. Trade well.